Good morning and welcome to today's 5 with Fitz. I'm Keith Fitz-Gerald. Thank you as always for joining me. The markets are mixed as I record this in the early going on the heels of a promising inflation report and, of course, Oracle's rockstar projections, which I'll get to in a minute. The rally feels funny. Now, I can't put my fingers on why, but sometimes gut feel merits caution. I've been doing this a long time and I've learned to pay attention every once in a while when this happens. The important thing to do today is not get distracted. I say that because Wall Street is hoping that you're gonna take the bait and focus on what all this means for the near term when it's the long term that really matters. At least you're an investor anyway. Which is why, of course, I want to remind you missing opportunity is always more expensive than trying to avoid risks you can't control or guess what the Fed's going to do next. Yeah, exactly. Here's my playbook. Number one, inflation. Yeah, about that. It was supposed to be the end of the financial universe as we knew it. Economists from here to Saturn warned that inflation would run amok, that tariffs, spending, and a dozen other forces would in turn crater the markets. Yeah. August PPI fell 0.01%. Now, one of my grandfather's favorite adages comes to mind. Economists are the only profession in the world that makes weather forecasters look good. You can do whatever you want with that one. Anyway, hopefully you've been paying attention and more importantly, investing accordingly. We've been talking for months about how the opposite of doom would happen. Once again, very fortunately, we've been spot on the money, pun absolutely intended, as we have many times over the years. Now, what's next? There's still plenty of upside ahead, and with it, profit potential. Not in a straight line, of course, but still, grab your share or somebody else will. And if you're not sure what to do or how to invest, you're not alone. The good news is that this is a totally fixable problem, and for what it's worth, I'll be here if you need me. If you got this covered, fabulous. Many investors don't, which is why I offer my perspective. Anyway, number two today, where markets go next and why you still don't want to bet against the big dogs. I joined my good friend and colleague, the super savvy Scott, aka the cow guy Shellady, on RFD TV yesterday for an extended discussion on Tesla, on why jobs numbers are constantly off, the Fed, and more. You can watch that video elsewhere on my channel, and I hope you find it valuable. Scott's just fabulous. He's super savvy, and it's an honor to be on his show every time. The path of least resistance is still higher. That's what you want to focus on. And with it, a new generation of millionaires is being created right now. Number three, Oracle just puts up and doubters just got shut up. Now, I've heard constantly from the doubters, skeptical investors, and more than a few TV types in the studio over the past few years. When are they going, meaning various companies, going to monetize AI comes the challenge. My answer has always been the same. They're doing it right now, which is why smart investors should be buying it ahead of time before the crowd wakes up or risk getting left behind. Well, after Oracle's announcement, now the crowd knows. Oracle just gobfobbed the spreadsheet cowboys. The company's stock has jumped 42.84% as I typed, the single best day for the stock since 1992. Hoo-yah! Can it continue? Well, let's put it this way. I wouldn't bet against Larry Ellison and co. any more than I'd bet against Elon Musk or Steve Jobs. Keith's investing tip, mark my words, I said on CNBC a few years ago and many times in interviews since. AI will go down as the greatest recording investing theme in human history. And if you're not on board one way or another, you are kidding yourself. And OBAers, by the way, feel free to join me in grinning ear for ear for having done exactly that. Gotten on board with many of the great names early on. Break out your victory dance too. I certainly am. Yeah, anyway. Back in the day, I actually had hair and I loved disco dance, but that's a story for another time. Anyway, trade idea, big upside moves can be a great opportunity to take the other side of the bet when volatility relaxes. I expect Oracle to give up some of the run shortly, maybe even as I record this. Market makers are already selling into the run, so don't let that go unnoticed. Number four, don't say I didn't warn you. Novo Nordisk has just announced that it will cut 9,000 jobs, about 11.5% of its workforce, as the GLP-1 gold rush gets tougher. Not surprising. That's what happens when competition like, Eli Lilly, which I told you about several months ago, cheap compounded knockoffs and slowing sales collide. It is the company's third profit warning, if memory serves, this year. And Wall Street will undoubtedly frame it as cost-cutting and efficiency, but I see what's happening very differently. When a company changes captains, trims guidance, and starts slashing headcount in the same breath, that's not typically a sign of strength. It's more like a leaky boat and they're patching holes. Anyway, the obesity drug market is still expected to top $100 billion by 2030 because the science isn't in question any longer. But scale, pricing power, and supply chains are. So I'd rather own the data providers because that's where the next big breakthroughs are going to happen as GLP-1s get commoditized. Keith's investing tip: sometimes what you don't buy is just as important as what you do. Number 5, let's talk Uber again. Uber still has this particular challenge. Now, Uber is in the news this morning saying it's going to launch Joby Blade helicopter rides on its app starting in 2026. I think that's totally cool. But my POV is Uber knows that Tesla is about to eat its lunch on the ground, so it's taken to the air, in my humble opinion, scrambling for anything that sticks to the wall. Air taxis may be the next generation of travel, but until the FAA signs off on these bad boys, Uber's biggest challenge is still the one on the street, making money with cars on the ground. Makes you think, anyway. I'm starting to think Uber may be a $50 stock a year from now, barring some truly earth-shattering, game-changing changes to its business model. I could be entirely wrong, of course, but meanwhile, I'm going to think Putski's short or avoid the stock. It's not perfect, but it works for me. Bottom line today, investing is a very, very funny thing. Loads of people say they want to be rich, but precious few actually do what it takes. There are only 2 paths forward, right? Number 1, learn what you need to do and make it happen. Or 2, make excuses. The former will change your life in ways you cannot possibly imagine until you get started, but the latter will too, just not the way you anticipate. And I speak from experience. I am not the smartest guy in the room, and I never will be. But if I can learn how to do all this stuff, so can you. You got this. As always, let's make it a great day. Thank you very much for spending a few minutes of your valuable time with me. I will see you tomorrow. Let's make it a great one.